Sony is a corporate brand whose identity is deeply rooted and very well established in the minds of potential customers. The brand remains healthy despite dropping from 25th to 29 in name recognition according to Interbrand's 2009 ranking.
The consumer electronics market is expected to grow at a rate of 7.2% annually to reach a value of $136,700 million in 2014. Sony is uniquely positioned to take advantage of this increase. As one of the largest global companies in the industry, Sony has the capacity to tap into changes in consumer demands as they emerge. Reorganization has put digital savvy and globally experienced staff in positions to maximize the potential seen in growth projections. 4 major Sony divisions experienced revenue losses in 2009, specifically electronics down 17%, games down 18%, pictures down 16.4%, and financial services down 7.4%. In the United States, revenues were down 15.4%, while revenues in Japan fell 15.2%. Sony's production facilities are located far from its customer base. Approximately 60% of the annual production in Japan must be distributed to 4 other regions. In FY 2009, the group produced 50% of the electronics segment's total annual production in Japan. The unfunded status of the pension liabilities increased at a rate 62% over 2008. Sizable unfunded post-retirement benefits would force the company to make periodic cash contributions, money away from production-related uses. Sony benefits from the flexibility to enter into key joint ventures and execute key corporate acquisitions. For example, established a joint venture project with Sharp to produce and sell large-sized LCD panels and modules. Among recent acquisitions are the purchase of a TFT liquid crystal display business from Epson Imaging Devices and Convergent Media Systems, which makes video integration solutions for the enterprise market. The negative economic conditions in the United States, Japan, and Europe have had a disastrous impact on Sony. The company receives approximately 74% of its revenues from these markets. As the economic slump lingers, consumer confidence remains low, and Sony has felt the impact in decreased revenues. Sony leadership has acknowledged that the downturn exposed weaknesses and vulnerabilities in the firm that have needed addressing for some time.
Fluctuations in foreign currency exchange rates and exposed to fluctuations in the value of Japanese yen, the US dollar, and the euro. Recently, the Japanese yen appreciated significantly against the US dollar and euro. A stronger yen makes Sony's products appear expensive in comparison and cuts into the value of overseas earnings. The firm acknowledges the need to implement effective hedging strategies to conquer foreign exchange translation effects. Positive points to its credit, but it seems to have lost the magic charm in the past few years. If the company uses its initiate strengths and opportunities
created using Powtoon